ESG, environmental, social, and governance investing, is all the rage. But how far can it go? Bank of America has been a leader in sustainable investing, and it's not limited to the environment or to governance. Last month, BofA issued a $2 billion sustainability bond tied to equality, with proceeds going not just to clean transportation and energy, but also to alleviating inequalities in Black and Hispanic Latino communities. Tom Montag, Chief Operating Officer of Bank of America, and Finucane, the bank's co-vice chairman, explained the how and the why.
We had made our $1 billion pledge for racial equality. And after that, because we've been a leader in the green and social bonds, we decided it would be good to provide a blueprint for everyone else to be able to access this market. And so we put together the $2 billion sustainability bond, and it was green and social, as you say. The difference for this was the social aspect of it was all for financial empowerment for Black, African American, Hispanic, Latino communities. And so the entire social aspect is there. And I mean, this is hard work because once you do that, you have to track the things that you're doing and make sure you're doing them. And so it was a lot of work internally and with finance to be able to have the tracking elements and know what we were going to do. So we track how much we do in affordable housing. We track how much we do for health practices. We track supply chains for minorities. And so all those things are part of the social aspect, David. So this was $2 billion. We had incredible demand across from corporate treasurers and from investors. And so we were very pleased with it. It's interesting. I think you'd like this, that 5 years ago in 2015, there was $38 billion of green, social, sustainable bonds. This year, there'll be almost $400 billion. So, and we've been, and so 10 times in 5 years. And so we're really pleased with the bond and what's happened. And by the way, it's part of how we work here. I was looking yesterday at affordable housing. Last year, we had over 8,000 affordable housing units that we helped finance. And of those 8,000, David, almost half of them, were green themselves. And so we've tried to take green and social in a lot of the things we do. So we were so excited about this bond and what it represented in the blueprint it set for America.
So, Finucane, as Tom just suggested, this is part of a larger plan, a strategy for Bank of America. Put it in context. How does this fit with the other things that Bank of America is doing?
Thanks, David. Well, ESG is sort of a good reflection of our strategy of responsible growth. How could you be responsible if you're not thinking about sustainability in the long term? It's also, as Tom is laying out, a very good business opportunity for us. We probably represent about a quarter, 1/4 of the social or ESG bonds that have been issued and underwritten in the last 8 or 9 years. Also, it's just been, and we meet with maybe the top 50 institutional investors, all of them are asking about this. All of them expect for you to be progressive in this regard and to do more. And our employees care about it too.
Tom, what about the accountability for all this? I'm not even necessarily talking about Bank of America, but in general, there's a lot of people saying they're doing environmentally sustainable things good for social, the social compact. How do we know that that's true? Because we don't really have standards yet, do we?
Well, we have standards, and the standards that we literally have our auditors come in and make sure we are doing the things that we list that we're going to do. And so it is a well-tracked process. David, we have, as I said, $10 billion of these type of bonds outstanding, 5 green bonds, 2 social. We did a COVID bond also this year, which was $1 billion, and this $2 billion sustainable bond. So all of those bonds have a list of things that the proceeds can be used for, and that list is tracked and maintained and audited to make sure we're doing that.
Tom, talk about the possible consequences for the investment community overall. I guess my question is, how big could this get? You mentioned that all sorts of new records are being set in things like the issuance of sustainability, other kinds of green bonds. So how big do you think it could really get? What's the future for this?
Well, it could be the entire market, couldn't it? I mean, if you really thought about it in some ways, I mean, you can imagine, I'm just thinking about in the news now is the Paris Climate Treaty and how you could work those kind of things in, how you could work in different, it's every company is going to have a different way. It's different for a bank than it is for a manufacturer, this for an airline. And so everyone has to find the things that work for them. But, culturally, it's just a good thing. It makes you think about it. It drives the organization to think about it in everything you do. And so, we've done a lot of research, our Bank of America research on ESG and how good companies practice ESG better than other companies. And so it's just a good mindset to have when you do it. And I think that people know that, investors want that. And that's why it's growing as fast as it is. It's hard to imagine 5 or 10 years from now, David, that everyone doesn't have bonds like this, quite frankly.
As Tom says, this is probably what every company will have to look at. If by 2050, we have to be net zero, and before that, carbon neutral, that means that every single company will need to look at their carbon footprint. That will require financing, advisory, M&A potentially. They need to buy offsets often because they can't fully get to carbon neutrality without it. So these are all business opportunities for a financial institution.
Tom, give us a sense of what comes next without revealing any state secrets at Bank of America. You've just done the $2 billion sustainability bond. Are you going to wait a while and see how that goes, or are you going to be looking for further issuances coming up in the coming quarters?
Well, we're as a business, we're talking to many companies around America and the world and issuing them themselves. And so, now we're on the other side of it, where we're showing them how we did it and how you can do it, and providing the blueprint and trying to get momentum for more people to issue these kind of bonds. The green part of it, David, happens all the time. It's the social part that's a little newer, or sustainability part. And so that will take time to get going. But, there's been many companies that have done it already, and you've seen it in the market. So I just think it'll just keep on growing, quite frankly.
So, Ann, we've mentioned the initiatives of Bank of America, which go well beyond issuing sustainable bonds, although those bonds are part of the initiative. How do you measure success? When you go into Brian Moynihan, you mentioned Brian Moynihan, how do you say, see, we're getting done what we want to get done?
Well, I think we've been able to demonstrate success on any level. On a macro basis, the company is doing well. We are, I would say, the leading ESG bank in terms of we're the largest underwriter of green bonds, the largest tax equity financer. So we have some tangible business. We've done $160 billion worth of business over the last several years, and we see big opportunity, as we've outlined, in the future. Our employees note that this is important to them. Our clients note that this is important to them. Our institutional investors say they care about this. And as I've mentioned before, I think we're going to see regulation that follows legislation around the world. So getting to net zero by 2050 is both a big task and a great business opportunity.
Tom, Ann has mentioned more than once the possibility of regulation dealing with governments, and some governments, at least around the world, have been sort of nudging investors in this sort of direction. If you didn't have government sort of nudging, as I say, in one direction, and by the way, you didn't have close to zero interest rates, would these bonds still work? I mean, how much of this is really a search for yield in a time when it's hard to find very good investments?
No, I think they would still work. And I listen, any market has sometimes a nudge gets it going, but that nudge was a long time ago. And now this is what investors want and people want. And the generations that are coming up want this. They want people to do these types of things. They want us to do ESG. They want us to invest in and support these things. And so the money that they're raising, the investors are raising, is ESG linked, both in the equity market, quite frankly, and in the debt markets. And there's so much research now, David. There's even ETFs that are ESG related. So it is the future.